Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, September 17th. Hope everybody had a wonderful weekend here. So we don't got a lot of economic news releases, so we'll kind of keep it short and sweet. We just got today the Empire State Index for September, and this is the manufacturing in the New York region. So the previous month in August, we had a negative, so it kind of contracted a bit here at negative 5.9. So they're kind of forecasting at least kind of break even for this month of September, and actually went further down. So more contraction in the New York region on the manufacturing side. So obviously not a very good number to see today. Now we'll just jump over to the headline news. To touch on the economic news releases, you'll kind of see this week, we'll see some manufacturing as well as some housing this week. So just kind of prepare you for the rest of the week here. So headline news here, we got the stock market's currently down. Partially, a lot of it is some investors cashing in a little bit. The manufacturing news wasn't too good, but there's some corporate profits and stuff like that. So because we're after the announcement of the QE3, it went up quite a bit. So now you got a few investors kind of cashing in on some of those profits as well. So it's partially that and economic news releases. Another item to note here is in Cyprus, some of the European Union finance ministers had met and basically couldn't come to really an agreement. They're trying to get some alignments for timelines and agreements for the banking sector there to kind of unite a little bit and hoping for January 1st, and it doesn't look like that's going to take place as they can't. Sounds like they're too far apart in their agreements. And also how to the terms and conditions that will be applied for those applying for money from the bailouts and stuff like that. So one thing to keep in mind is even though you hear about Spain and Italy and those countries, they actually have to specifically go to the European Central Bank and request those funds. They can't just be automatically say, okay, you're having issues, so here we're going to give you money. They know there will be strings attached to that money, so that's you may see some resistance to that as well, and they may not like the terms to those agreements. So. But they'll have it available to them. So let's go ahead and jump over to the bond market and see what the interest rates are doing today. We're kind of, as you saw, we had a bit of a correction on Friday at long red line, as you see, going downwards. We're up if you look at where we stand. So up on the chart here, we're above the 104 level here, where before we just dropped just below there at the 103.97. So right now we jumped up a little bit to the 104.13 as we're down 3 basis points for the day so far. But because of that, because we're higher up here, interest rates are a little bit better today versus what they were on Friday. So we have a slight improvement in the pricing for interest rates. We could be kind of sticking around this range for a little bit here, depending on what goes on in the equity market. So remember, a lot of times we'll compete for dollars with the equity market. So if the equity markets are if they're cashing in, that could benefit bonds. As a lot of that money typically go into bonds for flight to safety or safekeeping. So to park their money for the time being. So we could see improvement in the rates. All right, folks, you guys have a wonderful day. Thanks for stopping by, and I will see you guys tomorrow. And if you guys like to have these emailed to you on a daily basis, just stop by mikesdailymarketreport.com. Upper right-hand corner, there's a feed burner. Just go ahead and put, subscribe right there. And every time I upload, you'll have these emailed to you on a daily basis. Have a wonderful day.